traders, so welcome back to the Sharks Trading Academy's weekly market analysis. And over here, I'll dive straight into the Aussie dollar. So on the daily time frame, we can see that we have this liquidity lows to be met, and ultimately trying to liquidate these areas, right? So these would be our take profit areas. Dropping down to our 1 hour time frame, you understand that we took a trade this Friday over the NFP. We let it run towards liquidity lows, so we were actually aiming for these areas instead. But we closed our trade before the market closed and still looking to target these areas. So how we actually look to get involved in this trade would be to go to the lower time frame, understand where we can get involved. So over here on the 15 minutes time frame, you can see that we have this area, we have this supply zone where we can take trades into, right? So let's say if prices comes back into this level, into this supply zone, we jump down to the lower time frame to look for the shift in structure, right? Making sure that this high liquidates highs above, right? Whether it's equal lows, trend lines, by means of Wyckoff, and leaving behind unmitigated areas for us to get involved to first liquidate this area before aiming for lower lows. So we are definitely sell-side buyers for Aussie dollar. The next trading idea would be the CAD yen, and this is pretty clear cut. We actually took a trade over here this week, and I think we got a 0.1% loss because we were actually waiting for lower prices to be met at this supply zone, right? So we actually closed our trade before the NFP because we understand that yen pair is going to be heavily affected as well. And that is why over here on the 8 hour time frame, we understand that we have a supply zone after it broke out of structure over here. Now came back to retest. So can you see that this area over here is so important? We have the highs created, we have a break of structure over here, leading people to believe that this is a move down because we have multiple. On a retail mindset, this is a resistance, right? This is the support turn resistance, now giving you bearish movement over here. So sellers are trying to sell here, stop loss above this level and aim for lows, right? So this is the trading plan for the retail traders, but we understand that prices are likely to come back to mitigate this area over here. So this supply zone was the buy to sell move that broke out of structure, now came back for the real test that liquidates all of these highs. So you can see highs being liquidated, the final highs before the drop off. So this break of structure made us believe that prices are likely to hit into these areas, give us some sort of distribution before moving lower. So this is the trade idea for CAD yen. And how are we looking to get involved? So you can see on the 8 hours time frame, this is a liquidation of highs over here. And if we were to drop down on the lower time frame, we want to see a shift. So now we are at our 8 hours POI, and we have this area over here. So we want to see the weak hands transfer over here, right? We want to see the weak hands transfer into strong hands, and over here prices taps into this area, give us a small sell side move, but didn't confirm this area just yet. Why? Because we understand that we need to see the movement and we need to see the bullish leg starts to deplete, which means to say that we want to see a break of structure over here. So we know that we can be a buyer anywhere in between these areas until prices made this move. You can see this strong buy up liquidates all of these areas over here, give us a strong move down, and now we are looking at weak buyers. You can see that based on these candles, we have weak buying momentum, and we are likely to see a move up to mitigate lower areas inside of here before the move off. So you on the lower time frame could have been a seller if we were to came back to tap into these areas, right? So maybe on the 30 minutes or on the 15 minutes, you can see supply zones over here for prices to move into, since we have this break of structure already, right? So on the lower time frame perspective, you want to see a move into supply zones here. Okay, so use this supply zone over here on the 15 minutes time frame. Now we have a potential distribution where prices can continue moving to liquidate highs inside of here. This is the high, right? Give us a shift, breaks out of structure, pull back into supply zones, unmitigated areas to catch lower movement into this area, because we have this buy that liquidates all of these areas inside of here by means of highs and trend lines, right? Then the breakdown over here. So now we could have been a seller on the lower time frame over here, right? To bring us to the high time frame lows. So there are two ways you can catch this move. One would be on the lower time frame over here. The second one would be to wait for the high time frame confirmation. So basically a push back into these areas, a breakdown over here, so causing the BOS, pulling back into this supply zone for us to catch distribution to push prices lower into these demand areas, right? And see if we get accumulation for prices to move higher, or accumulation to mitigate areas inside of this supply zone to distribute lower. So all of these are potential areas you can get involved, whether you are a seller or you're a buyer. So the immediate move that you want to see would be a 15 minutes pullback into supply zones here to distribute into lower prices. Next up, we have the Euro Yen, and we can currently see that we have a break of structure over here or here, leaving behind demand zones to get involved. So with this order flow currently, you can see that prices are moving in this manner. Now give us a break of structure, haven't tapped into our supply zone over here. So on the 4-hour time frame, liquidity lows are still here, protected highs are still here, which means that we can look for move into supply zones here, distribute for prices to eventually move down. To liquidate lows here, maybe lows created along the way. All of these areas are take profit targets for your 4-hour time frame Euro Yen trading opportunity, right? So on the 1-hour time frame, or on the 4-hour over here, the current leg is that we have a break of structure over here, right? Pulls back into demand zones here, and now give us a break of structure over here. So on the lower time frame or the short-term time frame, you understand that prices has a tendency to go higher. So let's drop down to the 1-hour time frame. You understand that we have this move created over here. This is a demand zone. And how is this demand zone created? So we go down to the lower time frame. This is a bullish movement which came back down, liquidating this trend line, the lows here and lows here. So can you imagine all the stops triggered over here? Stop losses, sell stops, and all of the limit orders potentially over here, the buy limits here as well, all triggered, and prices made a sell to buy move, breaking out of structure over here. So this is a very strong area to look for buys by means of this demand zone. And we understand that prices are likely to mitigate these areas again. So you can see this low over here will be used as a liquidity area. So prices are likely to come back down into this area, liquidate them, pull back into potentially supply zones here before moving lower, ultimately tapping into our demand zone, give us the real shift, leaving behind order blocks or demand zones for us to get involved. And where are we targeting? We are definitely targeting liquidity highs here, 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 and ultimately all of these areas as well. So you may be thinking, where is our final target? So remember what I said about the 4-hour? We still have bearish order flow, right? And with this move, liquidity lows are here, and we have protected highs over here. So this is our final target into supply zones to distribute into potentially this level. So this will be the bias for Euro Yen. Next up, we have the Euro Pound, and over here we have a demand zone, a weekly demand zone. And for prices to move into these areas, we have to liquidate this level or this low over here, which means to say that this demand zone failed to hold. So the first thing you can see would be these obvious liquidity highs that will be taken off later. And what we are expecting would be a downside move into these areas. So drop down to the lower time frame as prices approaches this level, maybe on the daily or the 8-hour time frame. Okay, look for the shift in structure by means of some sort of accumulation right? Then aim for liquidity highs. So the first area you can aim would be this supply zone over here. Because as prices breaks this level, this supply zone will be valid because it broke out of structure, right? And there are definitely sellers looking to sell here. So if we see some sort of distribution inside of this level, this distribution may be the one that push prices down towards this demand zone for us to get involved again. So there is no reason why you should hold your trade here for prices to eventually retrace, right, into this demand zone. And therefore, you can take most of your profits here and look to buy again over here if we see the accumulation happen, right? So if you move down to the daily time frame, or maybe on the lower time frame, the 8-hour time frame, we do have areas over here where prices can eventually tap into. So the power of this wick, can you see this wick over here? Liquidate trend lines and lows. So this will be the refined area, I would say, where prices are likely to move into. So eventually we have a weekly demand zone over here. And this weekly zone is rather huge. So by refining these areas, you understand that prices has a tendency to tap into this 8-hour demand zone. And this is how you can actually escape, or I would say avoid trades that is happening here. So the truth about this entire weekly zone is that you are not able to see where is the real shift. So what do I mean by that? Let me give you an example. This is a bullish breakout, leaving behind an entire order block. Okay, so this is valid for buys. But the problem with this is that on the lower time frame, if prices comes back down into these areas, accumulate over here. Okay, let me just redraw everything. So you can see this move over here leaves behind a demand zone that is so huge. And as prices comes back down, it starts to accumulate over here. And some of you may get involved with this shift in structure, right? This shift in structure pulls back into demand zones and you may get involved. But what prices wants to do is to mitigate this supply zone before moving down. And this can keep happening, right? The minor accumulations for prices to move higher and then move down. So you may have gotten stopped out many times. And eventually you understand that if you go down to the lower time frame, all you needed to do was to find refined areas over here. Understanding that the real shift can happen over here, then the breakout and the move away, eventually into these areas. So this is what is happening on Euro Pound. And you can see the weekly time frame, you may get accumulations all over these areas, right? And you may get involved as a smart money trader as well. But you understand that on the 8-hour time frame, this is a refined area which serves as additional confluence, right? If prices are to tap into this refined area, and if you see a shift that is happening here, you are likely good to go, right? And as prices comes back to this area, you can look for further confirmations to push prices higher. Next up, we have pound dollar, and currently prices taps into a supply zone. Give us the shift in structure, taps into supply zones, and the move away. Taps into supply zones again, and move away. So with this, we understand that this is liquidity lows to be mitigated, eventually into this demand zone. So let me just label this as the demand zone. And prices are likely to pull back to catch sells into these areas, liquidating them eventually into this demand zone. And if we see accumulations here, we may break higher, liquidating this trend line over here. And eventually prices may move towards higher areas here before moving down, because you see that currently we have this area over here. This is a breakout structure, and this leaves behind supply zones on a higher time frame or higher areas that may be mitigated to move lower, right? So this is a possibility. And right now on the lower time frame or on the short-term basis, we are expecting a move towards this demand zone. And whether or not it decides to accumulate here to push prices higher will depend on what we get over here. So we're not going to anticipate movements by placing buy limits here, stop loss beneath this level, and aim for liquidity highs. we are going to look for the confirmations inside of here. We're going to see the transfer of weak hands into strong hands over here, leaving behind unmitigated areas. And you can even dive lower into these areas to look for confirmation to push prices higher into liquidity highs created along the way, or even supply zones over here. Over here, we have New Zealand dollar. And on the 4-hour time frame, we have this bearish order flow. And as prices taps into this supply zone, we expect prices to break down from here. So what happens if prices find support at this demand zone? We have a tendency that prices wants to go higher to continue this bullish order flow compared to this bearish order flow, right? Because prices taps into a supply, we expect prices to move down. We expect a break of structure. And on the lower time frame, you may catch sells for lower side prices to be met, right? And this is a demand zone on the 4-hour time frame or the 4-hour time frame, right? So this is a demand zone. If prices comes back down into this area, give us an accumulation, we understand that this move may liquidate highs here, 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 and eventually here by means of trend line and whatsoever, right? So this bullish order flow will push prices higher into maybe the daily supply zones, right? Ultimately, we have this break of structure over here, and we may have left behind higher supply areas over here, which means to say prices may come back into this supply zone ultimately before the shift in structure. And we have to see what happens on the lower time frame, which is whatever we are seeing currently over here, whether this demand zone actually holds or breaks down. If we see accumulation over here, we have areas to look for buys, right? To liquidate highs over here. But if prices give us a breakdown, then we understand that lower prices are to be met because we are going to liquidate lows here and lows here and continue the 4-hour bearish order flow over here. Then look for pullback after the break and maybe catch the lower time frame buys into supply zones on the higher time frame to catch sells. Dollar CAD will be the next pair that we'll be talking about, and on the 4-hour time frame, the first thing that is obvious to you would be these relatively equal lows, which means that there are liquidity lying beneath this level. Am I right to say so? So there are lots of orders lying beneath this area. And over here, we have a trend line that is obvious as well. And this means that there is liquidity lying above these areas as well. So knowing where prices are likely to liquidate orders, how do we get involved in these trades? So we identified that there is a supply zone over here and maybe on the lower time frame as well. On the 1 hour, we have supply zones here as well, right? And we can either look for sell to buy or buy to sell to liquidate these orders. So this is the range that we'll be working for, right? We're going to look for areas to buy into these areas to liquidate or sells to liquidate these areas. So currently on the 1 hour time frame, we have this demand zone that is valid for buys. So with this over here, this break of structure, we understand that prices has a tendency to move into these areas to liquidate all of this over here, potentially tap into this supply zone to distribute. And with this distribution, we either see prices coming back to mitigate these demand zones to move prices higher into this last area over here to finally distribute into these relatively equal lows over here to mitigate all of these orders, to liquidate them, to tap into potentially this demand zone, right? So you can see that this is the sell to buy over here, the sell to the buy up. So this will be the projection for UCAD. So currently on the 1 hour time frame, we are definitely looking to buy over here. So drop down to the lower time frame, look for accumulation to push prices higher to liquidate these areas and eventually this liquidity over here. And look for sells inside of here and here. So look for distribution, the transfer of weak hands into strong hands to push prices lower because we know that there is liquidity lying beneath this level. Lastly, for gold, we have this sell side move that broke out of this demand zone over here. And now prices may look for a downside or a sell side move into these liquidity lows to continue this move down, liquidating this trend line that was created back then, tapping into this demand zone that broke out of structure, and over here as well, to accumulate for prices to move higher, to liquidate all of the highs created along the way. Otherwise, expect prices to again move down, breaking this level, accumulate into higher areas, maybe over here, supply zones here, or here if it hasn't been mitigated, for prices to go lower into this 50% mitigation area. All right, because this is an order block that has already got mitigated over here, right? And we can use the 50% level of this mitigation to accumulate for prices to move higher. So these two will be my POIs, or my price of interest for gold.